All right, so we have seen that correction begin right here on this crypto chart. Bitcoin managed to top out at pretty close to $53,000, and we've now dropped by about 4.2% within just a day down to the 50K area. So there's still a lot more that this thing can drop. The way I see things, and that's primarily because, and we're going to get into this in depth in this video, it's primarily because we didn't find any resistance on the way up, either now or back in 2021, 2022. So naturally, there's not much support on the way back down. But that doesn't necessarily make this a doom and gloom video. There's still factors that go in both directions. I want to discuss them with you guys in this YouTube video. This has been a pretty good market for traders, and I think that it's about to open up even more with some even more spectacular opportunities. You already know the deal. If you want to trade where I'm trading, you can get up to 30K for free when you start trading using Bybit, link down below. That's free money. You can deploy it any way you like, and any profits are yours to keep. Deepcoin, a no KYC exchange, also giving you over 100K in bonuses. We're going to talk about them in a sec, but that's absolutely beautiful. Let's focus on Bitcoin here, and what we've had here are some really nice series of kind of parallel channels here, which we've pumped out of. This was a bit of a BART pattern, but then we came back up, and now we're kind of doing it again. I really like the look of this one, and the reason I like it is because we showed that this particular price range, which stretches between 51.6 up to about 52, is significant for support or now possibly resistance for a period of 3 days, right? And so that means that, look, we haven't really, this was a very quick pump, right? From the time that we broke 44K to get up to this high, it only took 7 days, and that's an $8,500 pump, And by the way, we've got to put this in perspective because a lot of you guys are just really starting to completely lose perspective of what this actually means in this market. But don't worry, that's why I'm here. That's why you guys are showing me love on this YouTube channel. Thank you all so much for smashing that subscribe and like button. If you haven't done so already, I do really appreciate that. To put this in perspective, Bitcoin within this entire 7-month period only managed to move up by $6,200, right? And that's 222 fucking days of price action, ladies and gents. That is a really, really long time for the price to only move up by 6.2. And then we've done more than that within just a week. 7 months versus 7 days. It's absolutely insane. And when you start to view the market, and I haven't told you guys an opinion, right? This is just straight facts. Previously, we moved up by 6K and it took 7 months. Now we've moved up by 8K and it took 7 days. These are only facts, right? And you can do whatever you want to do with these facts, but you and I are probably fairly reasonable at least. We're going to understand that that's a lot of price action, right? And so, that's going to be difficult, I think, to recover from, or more likely, more specifically, not to recover, but to sustain, and because of that, these kind of price ranges become really interesting because, if this was really good support, then it becomes a very predictable possible resistance area for the price to continue dropping down. And this is definitely a kind of position that I'd be interested in trading because it's a really nice clean level. It's quite easy to set a stop loss either above this wick or above this price action, and both stop losses are pretty narrow, and there's really good downside potential here, for a quick little trade. This isn't the kind of trade I'd want to be in for a very long time, but definitely something to keep me busy if the market does end up coming a little bit lower, because we do have a fair bit of a drop to come before the next key zone of potential support for Bitcoin, the way I'm seeing things, lining up here at the $44,000 level. Now, again, I've got to make one thing very, very clear to you guys who are watching. I am not here telling you guys that I'm a perma bear, just looking for the market to crash and everything just absolutely going to shit, because that simply could not be further from the truth. Your boy's still sitting in a 1,400% profit on my Bitcoin position, a 750% profit. This is even more than last time I showed you guys on my Tron position, and these are both longs. You can see that, right? They're both long positions. Pause it, analyze it, whatever you like. And so I'm definitely making money on the upside, but that's not going to stop me from making money on the downside as well. And that's not the only one I'm seeing, by the way. I think there's other similar opportunities across other coins. There's Solana as well. It's got this area of support right here at about the low hundreds. If it falls below this, it has a long way to drop. And if you think that these altcoins are going to be immune from that, then good luck. I think you're going to be in for a bit of a shock. These altcoins can definitely drop. There's a long way to go. And Solana is especially interesting because you can trade it for free with a $500 position on Bybit. Literally, zero risk on your part. You just got to meet these little conditions here, and you can, whatever you like, long, short, your business. But it is free money from Bybit, and any profits you make are yours to keep. And the same with Deepcoin. Again, no KYC. They'll double your deposit if you put in $100 and you trade up to 10K, which you can do in one trade using leverage. So that can happen pretty quickly. So definitely check them out for all that free capital. I think that this is starting to look really, really cool. I think there's even better opportunities than Solana potentially. I think, other coins like Matic look potentially good here. I think, Bitcoin obviously is just an easy one. And this doesn't necessarily mean that the only thing to play is shorts. In fact, to be honest with you guys, we're in an uptrend, right? So this is actually potentially a little bit aggressive to be playing shorts. And I'll cover why as well. There's another couple of reasons I want to cover with you guys later on in this video. But one of the key reasons that it's potentially even aggressive to be playing these kind of short positions right now, I don't want to say like gambling because it's not, but it is trigger happy, is because in an uptrend, typically you actually just want to be long as much as you can, right? Like you don't necessarily want to be short and just like play every little move because you're fighting an uphill battle. It's not easy. There's manipulation and bots and all sorts of other factors at play that are just genuinely going to make it quite difficult for you, the average person, me, the average person, to trade successfully. But where we have a much higher chance of success is simply just playing the retest, right? So I mean, the next obvious, very, very obvious level for Bitcoin is that $44,000 level. And this is quite a bit lower than where we are right now. It's about 14% down from here and about 17 from the high. But this is a really nice potential bounce zone for Bitcoin. Basically, 44K here, or this little pocket at 42, or this support area at 40.7. These are each, pretty good, I think, key levels across the chart that Bitcoin could be coming down for if it's going to capture some support. There's also some talk about Bitcoin just kind of coming down to 50K, this key psychological price area, and maybe some bounces off here and then up. Maybe grab some liquidity here and then go up. Look, I don't necessarily think that those are bad ideas, but to me, it's a little bit too obvious. Going long off 50K, I don't even know where you'd set a stop loss. It's just too wide, really. Like there's no key level there that I think looks particularly clean. There is 49.3. We had some kind of resistance and support over here, so you could argue 49.3, but these are weak levels to me compared to the 44K level. I don't know. I think too many people have been talking about it, really. For me to be super, super confident in it. And of course, we can't rule out the possibility that Bitcoin is just in a deviation right now, right? Because this is very, very normal that Bitcoin is in a deviation, and really our real price action is happening between these two price levels, and we're just kind of doing this, but we've had a quick little dip, and then we're coming right back up into the range. We're going to do something a little bit like this, come back in, and then maybe we blast off, right? And obviously, if you've been paying attention, that is exactly what Bitcoin did just here. We had a deviation up and then a deviation down, but for the most part, we were just trading sideways, and then we continued the direction of the trend. If you're a bull, then honestly, you're probably saying what I'm saying, which is that we need a retracement. But if you're a more trigger happy bull, then you might be expecting that. But my question to you is, well, how long can Bitcoin sustain that for, right? I mean, it could do it, and it has already done it. So it wouldn't be completely out of the norm for that to happen again. But pullbacks serve Bitcoin really well. I mean, one of the key things I've been telling you guys this entire last year is that one of the key reasons that I was expecting such an explosive rally to 30 to 40 and beyond was because we had a relentless downtrend, right? So you pay if you're a bear. It doesn't really matter if you're a bear or a bull, but the market pays you. It either it pays you for being absolutely fucked like this, or you pay the market for enjoying it like this. I mean, it's always going to be that way. Like there's always a yin and yang. There's always a positive and a negative, right? And it just comes like that, And I think a lot of people really struggle to kind of digest those ideas, but that would be at your own peril. I really wouldn't want you guys to be falling into that kind of trap. And we've actually. By the way, just on that note, I want to highlight this this guy's comment right here. We're going to talk about this in just a sec. Sorry, not this one, but we'll come back to that one. I showed that the majority shorts doesn't match that everyone is bullish. This is a really, really good point, and I actually posted this on my free 4Flies Gold Telegram channel, which you can join by clicking the link in the description down below right here. This is the link to my free Telegram channel where you get more analysis from myself and my team around the clock for free, even updates on my positions and stuff like that. So that is super, super cool. Definitely check it out. If you ever need to directly contact me for anything, maybe you've got a problem with an exchange that I've been working with or whatever, or literally anything, this is a direct link to me as well. So please do check that out. I'm always available for you guys. I do want to take a look at this long and short ratio thing, because it's actually like the only thing which I seriously, regularly consider, and it's completely working against me. In fact, for the last little bit, really, I mean, if we go back to very early days of February, we were kind of majority long for retail traders here, but since then it's been majority short every day, and even today we're still 60% short for retail traders, right? And retail traders are typically wrong. So this is a very clear indication that actually, this is a key metric that I typically like to look at regularly, which is working against me here, which is telling me that actually if most of these people are usually wrong, then this might not be the way we're going, and we're actually going to continue up. Now, granted, I mean, while most traders were long over here, the price was still going up. So this isn't 100%, right? And I think a lot of people struggle with that idea, is that every indicator has to be perfect 100% of the time. That's not realistic, and you've got to be able to keep that in mind. In fact, when everybody is piling on in the same direction, like when Bitcoin first broke above $20,000, or when Bitcoin crashed below $30,000, that's when we get the most extreme bits of price action. So there's a lot of nuance here, and what I just said might be challenging for some people to kind of wrap their heads around and kind of comprehend. And if that's the case, that's totally okay. I understand that it can be a little bit confusing, but you probably just need to brush up on your understanding of market dynamics and stuff like that. There's a lot that we go into with the 4Flies Academy course for you to kind of really wrap your head around that kind of nuance, because it does take some understanding and just really patience and just being in the game. It's that, like, I don't know what it is, that mojo, that intuitive whatever, that you really just kind of get over the years as being of being a trader. But for some people, this is intuitive and you just kind of get it right off the bat. Some people just straight up cannot understand this, and those are the kind of people that we make money off. But if you are one of them, then yeah, if you are one of the guys that can get it, then just put a little bit of time into it, and these kind of concepts will come to you. I wouldn't worry too much about it. And my response to this guy was, yes, but it's one data point. It's definitely an important one, but when everything else is stacked against it, I can't reasonably rely on just that one data point. And that's my issue with being dependent on any one indicator, right? When you use these kind of things, which in this case does tell me that I might be wrong, my problem is that I can't find anything else that confirms that we're still heading up, right? I mean, other than the fact that we're in a downtrend, which is arguably the single most important thing to keep in mind. So I'm not going to discount that. But other than that, to me, everything else is lining up to show that we should be ready for a drop. I was saying that for a little bit, and we finally seem to have stuck in a high. I don't know if this is a temporary high or if it's actually going to be a high that takes us a little bit lower. Obviously, that is yet to be seen, but I think that's really important. I also, this is another post that I shared inside of 4Flies Gold. I want to touch on James here in the comment section from one of our recent videos. He mentioned that if I keep the position open, am I going to be super pissed with myself if it takes a dump, knowing that I should have actually, closed the position, or will I be annoyed that I closed out too early? And not getting the last 10. Okay, a little bit of a strangely worded question there, or maybe I read it differently, but he's basically saying, would I be annoyed that I didn't take profits up here? And that I closed it, that I closed a lot of the positions before we even got there. And I had to just say it straight, guys. I was like, look, it's a good question, but I definitely wouldn't, and I can't be annoyed either way. I make the best decisions I can at each given moment with the data that I have available up until that point, and I follow a well-built, refined system for my trades, and I'm very happy with where it got me so far. This is the most important line, ladies and gents, and I really need you guys to keep this in mind as we're heading into a new bull market, because if you fail to keep these kind of things in mind, you're gonna stumble, you're gonna fall, you're gonna hit your fucking head on something, and you're gonna lose a bunch of cash. Like this is what happens in the trading game. If I pinched pennies, i.e., if I argued with my system, if I got upset that I took profits too early, even though it's the strategy that's been working for me for, like, I've been in the game for 7 years. It hasn't been working for me for 7 years because I haven't had the strategy for 7 years. But I've been in here for a long time. I've arrived at this because of everything that's kind of led me up to this point. If I thought that, I would have broken things apart a long time ago. I wouldn't have even gotten into this position in the first place, right? This is something which I think is really important to keep in mind is like, you don't know necessarily if a certain position is going to be a 30% profit or a 3,000% profit or a 1,400% profit like this one. And if you hope that every single one of them will become a home run, you might never actually stack those compounded gains along the way. And then you'd be losing out on the real gold of being a trader, the real return, the real just, I don't know what the word is, just the magic of being a trader. Because the magic of being a trader isn't in these small gains. It's undoubtedly in the compounded returns, right? If we look at a $10,000 starting balance and we manage to pull a 30% profit on here, this is an example I've given you guys a lot. That's absolutely fantastic. You've turned it into 13K. But if you do that just three times, you've doubled your money. And you can apply this to any account balance. We can run this for $22,000 and you've doubled your money just with 3 of these in a row. And just to put this in perspective for you guys, let's say this is a short position, right, that I want to take, for example, just because it's easy and it's pretty close. If I'm trading this on 10x leverage, I just need the price to get rejected here and drop down by $1,500. I just need a $1,500 drop on a $50,000 asset. I need a $1,500 drop on a $50,000 asset. It's a very small move. I mean, if we zoom out, I'm not asking for a lot. I don't need a miracle to take place on this chart whatsoever, right? I mean, this is a small move by any measure, and it would still be enough to get me that kind of 30% profit. Just as a quick, easy example of what I'm talking about. Compounding is really where this stuff becomes very interesting. And if you start doing this, I mean, granted, we're talking about, in a row, so this is completely unrealistic, but you get 8 of these in a row and you're at $200,000, right? You've nearly 10x your capital. I mean, it's just absolutely insane. And again, these numbers work for any account balance. A 10K account becomes 81,000 if you've pulled 8 of these in a row. Completely unrealistic that you'll do it 8 times in a row, of course, but also not the point. We're just talking about the power of compounding here. And if I were to start to trip over things like this, I wouldn't be able to tap into any of that magic, right? Because I'd just be too scared of things potentially going wrong. So really, really good stuff there. I really did, I always read your comments, obviously, but, I did decide to kind of post these in the 4Flies Gold Telegram channel as well. If you guys like this kind of segment and like that kind of content on 4Flies Gold, then please let me know, and I'm super happy to do more of that. But let me come back to the analysis here. And by the way, we could do even more Q&A, just kind of scrolling through the comment section if you guys like, or especially if you have specific questions that you want me to cover. I mean, it's super easy for me to, throw them up on video and just dedicate like a nice little 5, 6, 7 minute segment of each video to your questions. And if that's what you want to see, then drop them right now in the comments, and I will definitely do that for you guys. I want to talk to you a little bit about some macro traditional finance factors which could have some influence on the markets. Here's the dollar actually now potentially forming a potential fractal where it's forming a similar kind of chart pattern to what we did before, where previously this actually allowed the dollar to rally up quite nicely, and that could be the case again right now. So lately we've had a positive correlation with the dollar. The dollar has been going up and Bitcoin has been going up, which is obviously unusual. I think, again, this is more of an exception and nothing particularly strong to read into, but I do want to highlight this to you guys because the analysis here is if the dollar goes up, that is typically bad for Bitcoin. Lately, hasn't been the case. I don't know what conclusion you want to make off it. Personally, for me, this is not bullish. I'm not going to bank on the positive correlation staying. That's actually out of character, so I don't know why I would place bets on that kind of thing. For me, this is still a negative sign. However, the S&P 500 to me does still look pretty good. We cleared that all-time high absolutely beautifully, and we've stayed up, and now we're kind of consolidating and coiling up, potentially getting ready for another move up. So, that's a really, really good kind of climate for the market. in terms of potentially finding some sort of a continuation. Obviously, we've been keeping an eye on the Fear and Greed Index, which is Russian bar in Dubai, just weird ads coming up. I don't even know like how my cookies are getting this off me. But I don't even rent cars. Like it's so random. But extreme greed right here on the Fear and Greed Index. And I mean, of course, this hasn't updated. It's going to be a little bit lower probably when we see the updated reading. But I mean, it's still pretty high, so definitely not ideal. And these kind of things to me do kind of indicate that, I mean, this is one of the key reasons I'm not super optimistic about the short-term strength of the market. It's purely because like, I mean, if everybody's bullish, then and like I said, I mean, the long and short ratio does contradict this. Granted, this is only on Binance, and the data's not, it's not what it looks like at face value. Like this is just accounts from today, right? So it doesn't really take into consideration necessarily the cumulative effect of what happened before, especially because this is retail, and retail flip flops really quickly, right? So top traders have been pretty consistent for a very, very long time, but retail haven't. So. I think that there is a good amount of nuance to apply here. But if we do end up dropping, I want to show you this as well. There are some really interesting potential Fibonacci levels here. The 618 level is breathtaking. The 618 level is more beautiful than Madison Beer, Karina Koff, all of these beautiful, beautiful specimens that we've been blessed with on this planet, put together, multiplied by 10,000, and then slap some AI generative enhancements for beauty on them, and this chart is still more beautiful than it, ladies and gents, because we've got a daily EMA right here. We've probably got an Ichimoku cloud, which I'm going to pull up in a sec. We've got a horizontal area of support. We've got a psychologically charged price level, and we've got a 618 Fibonacci retracement. I mean, like Christmas came early, I guess. I don't know. It doesn't mean that we have to bounce off that level, right? I mean, it's just a really nice, build up of confluence. It doesn't have to mean anything. But to me, that's a really, really nice way to kind of see that there's a lot kind of going in that, particular direction. If the price ends up falling down there, let's actually take a look at the Ichimoku setup as well, because to me, this is an amazingly reliable indicator. On the 4 hour, it's all the way up toward about 48, 49 now. But if we take a look at this on the daily, it's right there. So we've even got Ichimoku support on the daily time frame here. So I mean, if the market does end up dropping down here, this is such a phenomenal place for the market to bottom out at. And for me, it could be anywhere. I mean, this is the nicest, happiest place for the market to come down to and then continue on up. But maybe there's a little flash crash. Maybe it goes down here. Maybe the flash crash goes down here and we set a kind of double bottom and then we continue up. And that would be totally fine too. I mean, I wouldn't really have a massive problem with that either. We actually kind of did that over here, right? Like we kind of swept the high, but only a little bit, so not nearly as much as this. And then we just kind of came back down to the same low, but it was only a double bottom and then just off to the races, right? So, are we going to do that again? I don't know, but definitely looks really good to me as a setup on the charts. So, I can't, not pay attention to that, right? Like to me, that is pretty good. That is a super, super healthy sign in this market. Our shorter term indicators are looking strong. Here's the 4 hour EMA ribbon spanning a beautiful 4% range. I mean, it's definitely got a nice spread right now, definitely telling us that this thing is still fairly bullish. If we've got a bit of a bearish scenario, then it's like I said, we're probably looking at something a little bit like this, maybe drop a little bit lower, come back up for resistance, and then back down. I showed you this orange box, but it's only, just an example. I mean, I could just as easily move the orange box up here, and it would still be completely valid, or I could stretch it all the way up, and it would still be completely valid. So, this is going to be down to, your own individual kind of judgment on what this kind of stuff could end up looking like. But that's basically what I'm seeing right here. So there you go, guys. I hope you have enjoyed this video. If you have, you know exactly what to do. Show it some love, subscribe, tick the bell, all that good stuff. Hit the like button. Of course, you've got a beautiful set of bonuses waiting for you all in the description as well. With Bybit, you can get up to $30,000 to trade with completely free of charge. You just got to start trading using my link and that is it. Deepcoin is a no KYC exchange, giving you over 100K, and they will just double your deposit if you put in $100 and start trading as well up to 10K. So that is absolutely beautiful, and it is a no KYC exchange. You just get $10, by the way, just for signing up, which is super, super cool. BingX, another great alternative, and these guys actually offer stock trading, which is super cool, like Apple and Tesla, and they even do Forex and commodities like gold. So very diverse indices, S&P 500, like very diverse exchanges. A lot of different cool shit you can do on BingX, so definitely worth checking that out as well while you guys are down there. But with that, ladies and gents, I hope you have enjoyed this one. It's a fun market. I'm liking what I'm seeing, and man, this is nowhere near being done. I mean, this is gonna stay good for a little while. That's definitely my scoop on things. All right, guys, thank you all for watching, and I'll see you all in the next one. Cheers.